Hey, happy weekend, everybody. Bob Trade Genius. I'm going to show you guys a few things, a few ways that you can make money nearly every day trading the stock market. And this is the ES E-mini futures, and this black line is the VWAP, which is the volume weighted average price. It's kind of like a home base, and it also kind of informs you of your confidence in taking a position. And this is our profit ribbon, which is designed to look at trend changes, and I have a filter on it so it doesn't flash on every one of these turns. It's looking for the ones that push as far away than the center line than just every trade. And then here's a stochastics that basically show me the intensity of the of the trend. And so what we do is overnight is that we look for the high and we look for the low. Now, I'm in Pacific Coast time, so I don't really ever trade anything before like 5 a.m. in the morning. And just been my experience that is that it's difficult to do, at least for me. And so most of the volume comes in between 5 in the morning and 9 in the morning my time. And you can make plenty of money there, so you don't have to worry about missing every trade. And so, just to give you perspective here, so overnight about 3 o'clock or 6 o'clock in the morning, East Coast time, when a lot of the U.S. traders are starting to roll in, Europe's been pumping, we got basically a sell signal here. And typically, if you get a sell signal and you're above 2 standard deviations, you'd have taken that short, and you probably would have covered that VWAP. And that's just a good rule of thumb to do. And here the intensity of the stochastic took it over 80 and brought it back down, which gave you confidence that probably be a good trade to take. Then it just continued to fall. Okay, now some traders may have stayed in this trade the whole way, but assume that you didn't. And then you got this huge drop here, and this is a hammer. Typically you could buy these hammer moves. They tried to test it back down again, but we didn't really get a trend change signal till about right here, which is fine. That was a 31.75, and it took it right back up to VWAP here. You'd have picked up another 5 points for your trade. And then what happened, which is really interesting, stochastics were extended again, and VWAP capped the move. So when you got a sell signal here and you got a sell signal here on the ribbon, even though it didn't flash to black because it was pretty close to the center line, is that you would have took this thing short, and you could have took this thing short right into the open. All right, and what it did here was that was also the low of the day. The previous low is here, and then here was the actual low. So when you get a low right at the open like that, just like if you get a high right at the open, it typically is the bottom for the day. But we had a lot of news, so today was crazy day. And then you got a buy signal immediately, and it just took it straight up through. Now, rule of thumb is that if you get the VWAP, you're probably going to cover that trade. Okay, but you're talking a 15-point move here, and then it just blew right through. And then you got another sell signal here, and again, the intensity of the stochastic was over 80, and so I doubt anybody, unless you were really looking for like a trade that was like SD2 over, and I think I have it here. Let me go. So this is where TradingView has its limitations and Thinkorswim does not, is that I have additional information here that at 7:05 when it pushed up past 1 standard deviation to 1.5, and then we have a line we call the magic channel line. This is a volatility based indicator, and it hit it and came back down. But some guys shorted this back into VWAP, and then that trade would have been ending there. So, and then at this point, it just collapsed again. And this is a trade that I did not take because I just was worried that, when you get a move, 84% of the time you're going to end up touching one of these edges and you're going to come back to the middle, somewhere in the middle. What came up, it almost touched the highs, which is unusual itself for it to hit both sides. I think less than 5% of the time you're going to break both ends of the overnight action. Came right back down and broke the low again. Typically these fail. But somebody came into the rescue, and you had enough intensity to bring it back in long. I didn't take this move. In fact, I told people, I said I don't trust the move, and it brought it right back to VWAP again. But an incredibly profitable day trading, yes. And then this is just slop and chop, and you just stay away from it till like the last hour or so. And that's why I told people I try to take a move in this area here. Around 2 p.m., you typically get what the institutions are doing, but this was a Friday just dead zone. And but if you're down on a Friday, then typically they'll ramp it into the close when people close their shorts. But this was a pretty modest ramp. It wasn't even worth trading. So a lot of the action's the first 4 hours, and so we look for trend changes. We look for it to come back into the the overnight action, and we look for penetrations of these linear regression lines and have it come back in, and then I use our trend change signal, and the stochastics kind of give you a fairly good sense of it too, and then the stochastics just really give you the intensity of the move to give you kind of courage with it. So you can use it or not use it. I go back and forth. I use on Thinkorswim. We have it built in here, and I also have a money flow indicator here, which you could see here. So, and usually when these things flat top like this, when they flat bottom like this, that gives you some thought to maybe take a look at some of the other buying indicators, which was supporting here. You had this waterfall that was just overdone. RSI got all the way down under 20, and these are typical moves for it to fly higher. And then money flow was also popping. And so none of these are end all be all. You have to take things in context, but when you get extremes, you trade the extremes. And that's why I like our ribbon, because it helps us see the trend change, and you can see it in the stochastics too. So it's just a nice tool to keep you on the right side of the trade. And if you incorporate VWAP into it, it kind of helps you understand, like, this was a no-brainer short, okay? This was a no-brainer long, and then here it gets a little bit more interesting. So a lot of this was news driven. But if you took this trade and this trade, you could have been done for the day. So just FYI, and we do these trades all the time. And this class for the people in our that subscribe with us is that you do a couple of these trades. And if you do it with binary options or the Nadex, you can, if you do 2 contracts, you can be making $200, $300, $400, a day trading this way. But definitely, you should be able to make more than $100 a day, and you're controlling, a margin of $500-$600. So it's not an overwhelming amount of money to be able to turn that kind of return, but you have to play the edges. Don't trade every wiggle. And I use the 5-minute, and you'll make money. There's a lot of it to go around, so just catch the edges and trade back in. Catch the edges and trade back in. Catch the edges and trade back in. Just be your mantra, and don't try to play the wiggles, because that's where you usually lose money. I call this the give back zone, because you did really great here, and you think you can keep doing it, and you give back, because it just chops your stops. Anyway, I have more of these tips I'll share with you guys, because there's a lot of ways to make money, and my favorite way I'll share with you in the next video. Have a good one. Bye-bye.